Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Well, got to say, investors liking this report in the aftermarket. Stock still up about 2% here in the post-market trade. Hey, let's see what Bloomberg News Managing Editor for Global Tech, Consumer Tech, thinks about this. He is Mark Gurman, knows everything about this company, lots of exclusives. This feels pretty good.
Tim Cook gets to keep his job, right? At least for now. This is a massive quarter. This is a home run, their greatest quarter ever by orders of magnitude. It's a gigantic beat on overall revenue. China is back. You have a big beat on the iPhone in particular. $85 billion quarter is just insane. The installed base, 2.5 billion. The numbers are just beyond excellent. We could ignore the fact they missed on wearables, home and accessories. We can ignore the fact they missed on Mac. We can ignore the fact that they barely crossed expectations on services. I guess none of that matters when the iPhone is selling so well.
Yeah.
But still, there's the big existential question of what's next. It's an important question because of AI, and Apple absolutely needs to figure out its AI strategy. There needs to be an AI reckoning of some sort there. But they just bought themselves a very long time with this just insanely great quarter.
So let's talk about a couple of the areas that you highlighted there. One is China, and another one is the sort of the concerns that people had about memory chips in this quarter and the rising prices of memory chips. How was Apple able to navigate this so it didn't hit its margins like people thought it would?
They buy components and memory components quarters and months in advance, sometimes years in advance. They have these deals struck. So they're working off of numbers and pricing and materials here that really give them extensive pricing power over competitors. So we'll hear more about that on the call today, but it seems like they're fine.
Mark, I love this. I mean, I'm looking at our live blog, so you must have kicked this out before you jumped on air with us. But you did mention that the significant things on the call, you've already talked about the AI strategy. Succession, you've kind of said maybe that's off the table for now because this was such a blowout quarter. You talk about the long-term viability of the business if it doesn't get its AI act together. It's hard to even think about that when you see the numbers here and just what a big company this is and how significant it is. I feel like in so many different people's lives. Like I have an Apple household. I think Tim has an Apple household. Is that really the long-term viability if they don't get AI together?
They call me Tim Apple, in fact.
They do.
Yes. I said long-term, right? And I'm talking really long.
Okay.
The really long term here, right? Like at some point there is going to be a need to fulfill these AI desires, and they're going to have to figure that out.
Well, Anurag Rana of our BI team, he talked with Tim and I just moments ago, and he talked about, how they're working with Google when it comes to AI, relying on them right now for their models. And so they're not doing the big AI spend. That makes sense for now, too. So do you agree that that's kind of a smart strategy now and kind of waiting it out a little bit, but at some point they've got to kind of do their own thing?
Well, it's not that they're waiting it out. It's that they have no choice. They have nothing internal. So it's not that they're waiting it out. It's that they need to do it. And so they're partnering with the best partner they can that's going to offer them the best pricing power, which for now is Google. They initially wanted to work with Anthropic, but from a pricing standpoint, that didn't work out. They couldn't work with OpenAI because they're, hardcore competitors at this point. So Google is all who was left. And obviously the judge didn't break up the search deal there. So it made sense and it aligned pretty nicely for them.
Okay. Do we know yet how Apple was able to beat expectations in China? Once again, for the first quarter, the most recent quarter, Greater China revenue came in at $25.53 billion. 21.82 was the estimate. You said it minutes ago. It is back in China. You're holding up an iPhone right now. That's what they did?
I'm answering your question.
It was the iPhone 17?
The color orange.
Oh, it's the color orange. It's that easy?
No, this is the Pro Max. No, it's design. People buy the new designs. This is the first new design in half a decade. It got it done. That's why you do new designs, because you're trying to bring in new customers. You're trying to spur upgrades, and that's the way to do it.
Didn't they know that?
Of course they know that, but it takes time to do these new designs, and you kind of want to get it right. And then you can't do it too often, because if you do it too often, it doesn't have the power that it has if you do it only every so often.
Hey, I want to roll into this, a story you've got on the Bloomberg that you put out today. And this has to do with Apple buying the Israeli AI startup that interprets facial movement, QAI. Is this important?
I think it's going to enable some features for future AirPods and smart glasses and mixed reality headsets and all that. But it's not fundamental to the overall AI strategy, which I think they're still trying to figure out.
Also,
it's just one piece of the puzzle.
Okay.
Mark, another story that you reported on this week, Apple's Tim Cook calls for a de-escalation after Alex Preddy's shooting in Minneapolis. There's this thread that Tim Cook is trying to, a needle that Tim Cook is trying to thread. He was at the White House on Saturday.
He didn't do a very good job.
Why not?
The needle. Well, I think his statement was kind of worthless in some respects. I think that he spent, I don't know, a fifth of his statement talking about how the president, the one who's overseeing the policies that led to the situation in Minneapolis, has his ears wide open to listen to feedback. I mean, I'm not sure that's what his employees who are sort of revolting internally about this were looking for. I think they were looking for Tim Cook to take some sort of stand here, and he really didn't. You know, from his perspective, is he's scared to upset Trump and get tariffs and other policies slapped onto Apple's business. So you'll see him continue to do what he's doing, because this is not about taking a stand at this point for him. This is about protecting the underlying business, and the results speak for themselves. The underlying business seems pretty well protected.
All right, like we like to do, and you know we're going to go there. What do you think are the top two questions that's got to be asked on this call?
They got to ask about AI, and they got to ask about succession. I'm sure they're not going to, though. I mean, maybe AI, but they're not going to ask about succession and risk not being invited back next quarter to ask more questions.
Are they going to ask about him being at the White House to see the Melania movie?
Like I said, they don't want to risk being banned from asking questions next quarter. So no one's going to ask anything that rocks the boat. All right. You'll see. I hope I'm wrong.
Okay. Great stuff, as always. And we'll be looking for your reporting after that call as well. He is Mark Gurman. Thank you, Mark. Managing editor for Global Consumer Tech for Bloomberg News out there on the West Coast.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, let's bring in Ed Ludlow. He's the co-host of Bloomberg Tech on Bloomberg TV. He joins us from our San Francisco bureau. Ed, the story from Mark Gurman is out. Sales trouncing estimates after iPhone fuels record quarter. Tim Cook called the demand, quote, unprecedented. Is this all about the iPhone doing well around the world?
Yeah, all about the iPhone. And in some ways, it's like an issue of chronology and timing, right? Think about when Apple announces the iPhone 17 generation, and we're all there in Cupertino for it. And then it goes on sale, and you have the holiday quarter. So, actually, it goes a little bit beyond that. Yeah, this is where the Bloomberg terminal comes in useful. So that is a big beat. You can just see it looking at the headline on a dollar basis. But not only is it 9% above consensus, even the top end of the most bullish ranges on how this iPhone would do were only about $81 billion. I think it came in above $85 billion. So they've done something. Either the phone has got traction, or they've done something smart with the timing of it, and it's sold well. The bit that's missing, of course, is that commentary does not have anything specific to do with Greater China. We know the numbers in Greater China are really good, but how did this iPhone do there?
Yeah, is it just, just a good quarter, or was it luck, or was it really strategy, right, of understanding?
I'm super cautious because sometimes we've relied on third-party data, I won't name it, it would be a bit unfair, but there are various third-party data sets that say, oh no, Apple's doing really badly in China.
Everyone, Ed, knows
really
who you're talking about. It's okay.
Okay.
You don't have to name it.
I'll stick to my guns. And, and then Apple comes around with earnings, and the opposite has been true on more than one occasion. But this occasion, like the third-party data, this sort of incremental and anecdotal of people queuing up for the iPhone 17 in all markets, but like Greater China, it was kind of there. So that's interesting. Where else do you want to go? I mean, this is Apple. There's anything?
We want to go to AI. Because,
so you want to ask me about the thing that they have nothing to say about now. Sure.
Thanks, Tim.
Every analyst has really pointed to that. I mean, we can talk about the relationship that Apple has with Google and for Gemini. We can talk about all the money going to OpenAI potentially from Amazon and other companies, about a potential $100 billion fundraising round. We could talk about Apple relying on third parties rather than building its own. Is there a risk in doing that?
I go back to basics, and I'll kind of rely on Bloomberg's Mark Gurman, who is one of the world's leading journalists when it comes to covering not just Apple but consumer electronics. And in the context of this earnings print, what he's written is probably true, that Apple has done enough to mask over or allay the concerns that investors have about a lack of progress in AI as a product. The reporting's quite clear. And it's been announced now officially, right, that at least on the interim, Apple's AI generation of Siri will be underpinned by Gemini. And Mark's reported a lot about the financials around that, right? It's a $1 billion per annum agreement. We don't and we won't get this sort of announcement like, here it is, here's the date it's coming, and this is what it can do until it's here. That's not how Apple operates.
Yeah. It's just, I mean, it's pretty like where do you go? Where do you go? Here we are looking. I mean, the stock isn't up as much as it was earlier. We were talking about, more than a 2% gain, I think, at its highs here in the aftermarket. It's just up about 0.75 percentage point. What is it that they need to do maybe on the call? Is it AI? Is it that this is sustainable? This is a strategy. This is, we figured out China. Like, what is it?
Well, I don't, forgive me, because I was blogging. I didn't hear what you guys were talking about just before. But
it's okay.
In this very limited earnings release and statement, you guys maybe went over the risk factors and forward-looking statements.
Yeah, we talked about that. We talked about that. I talked about how you started pointing that out back in May of last year. In
May of last year, I was sat next to you two in the New York studio. Do you remember? And we were like, oh, that's interesting. They've never said that before.
But that was the first report post-Liberation Day.
Right. The only observation I'll make in line with that is that this release also says nothing about the environment for memory chips. And, memory chip prices are very high.
But their margin was pretty good, right?
And their margins were pretty good. And there's a scarcity. And the principal difference is like, this is why it's so fun to cover hardware companies. And it's a privilege to be a technology journalist. When you get access to all these companies and speak to the CEOs, if you're a very big company, you have leverage with your supply base. If a supplier has to choose, I've got this number of things and I can only send them here, or I can send them there, or I can split, it helps to be Apple, is what I'm saying. And there are companies that I've covered whose CEOs, will privately just agonize over how difficult it is to convince suppliers to give them the things they need. So on the call, that will come up. The sell side are likely to ask about it.
But, there are high prices, and then there's Apple dealing with high prices. And when I asked Mark this question about how they were able to successfully navigate these higher memory prices, he said, well, one, they're Apple, and two, they buy so far in advance and they buy the components too that go in. So at a certain point, Ed, it'll hit them, right?
Well, it's not just that memory prices are high. The reason that memory prices are high is that historically memory, DRAM and NAND, flash memory, is a very cyclical up and down business. Boom and bust. That's what Ian King would say. Boom and bust. Ian King leads our semiconductor coverage, right, at Bloomberg. And it is correct that Apple's supply chain teams are its secret sauce. That was Tim Cook's whole thing. Yeah. He was COO. That's what he was good at. But the reason prices are high is because of scarcity of availability. because there is such demand for equivalent chips that are going into data centers. And so like Mark's answer is appropriate. Apple has leverage and the ability of scale to say like, okay, we have got ahead of this. And one would imagine that their supply chain team is sophisticated enough to have foreseen some of the things that we're now experiencing in that market.
So the first thing Mark said to us, I don't know, you were blogging, Ed, and you were looking at the results, was Tim Cook just bought himself time. Tim Cook gets to keep his job. I mean, there's been a lot of questions about succession. Mark says that's one of two questions he would ask on the call. The other would be about AI. In your view, was his job not at risk, but there are questions about who leads this company after Tim Cook.
I am not Bloomberg's Mark Gurman.
Nor
but
am I.
What I would say, right, is that when Mark did that recent reporting, and it's been over a period of time about which executives are now more at the forefront of Apple's future, he was crystal clear in that reporting that there is no suggestion that Tim Cook being replaced or stepping down or retiring is imminent. That this was a longer term thing. What I would reflect on is the conversations that I have with people in industry and those that come on the show and talk about it is, Tim Cook is the operator that many people would want in an environment like this, where we still have trade and tariff considerations. Mm-hmm. The movement of goods between borders from point A to point B is quite difficult. As we just talked about, like specifically memory pricing, that's within his range. This is not me speaking. This is how people would relay it to me. Mark, when he goes on air and when he writes, and again, I'm not speaking on his behalf, he would talk a lot more about the product, fresh products, reiterated and renewed products, and the product pipeline for the future. And right now, I don't know that people are necessarily so worried about that. At least in my world, they are worried about when they're going to get the software bit right with AI.
It's interesting you say AI. It's something we talked about just briefly with Mark Gurman. It's a story that he put out. Apple buys Israeli AI startup that interprets facial movements. He's like, interesting, will help in terms of, I guess, product development, but not necessarily a big deal. But, what is the number one question that they should be getting on the call when it comes to AI?
Yeah, if I had the opportunity to interview Tim Cook, and let me be honest about it, I haven't had that opportunity, or any other Apple executive, the big question is, in the future, what is the form factor by which we interact with artificial intelligence, in particular, voice-based AI assistants, right? For the most part, I use, and I don't know about you guys, but I use ChatGPT's voice mode quite a lot on my phone. And I use other generative AI tools through my laptops. And because I'm a nerd and because Bloomberg issues me different things, I have my own MacBook and I have a Windows-based PC, right? There are other people that envisage a world where the form factor device, the thing that we interact with, is not a phone. It's the glasses per Meta. And look at the surprise upside from Meta's earnings about AI glasses tripling. That's what I'd ask Apple. What do you see in the future about how people use your AI?
So, Ed, we have time for one more question, and we'd be really remiss if we didn't ask you your view on Amazon. This news coming just late in the day. Switching gears a little bit, still on AI. Amazon in talks to invest $50 billion in OpenAI, expand ties. This could be part of a $100 billion funding round, which would value OpenAI at more than $800 billion. When we're talking about a funding round of $100 billion, I mean, we're talking about just the massive scale. What does it mean that Amazon could invest this much money?
Well, Amazon probably can invest that much money. What we've seen is most of the hyperscalers that were wedded to one player have diversified. Anthropic and Microsoft have deepened their interaction. Anthropic was very heavily aligned with Amazon. Google and Anthropic are very heavily aligned. Anthropic relies on TPUs. Amazon, from a software perspective, has tried to accommodate all the players on its Bedrock platform, which is basically a workplace where you can either train or build on top of existing models. So the financials are there. Like if you have if people are watching that are investors in those companies, phone me, explain the dilution to me, explain the post and pre-money valuation. But OpenAI needs capital. It is coming from multiple places, apparently. And one would imagine, based on the reporting that's been done by Bloomberg and others, this is a big, large anchor round before a future IPO as well of some part of the OpenAI entity.
The scale is just otherworldly, the amounts of money that we're talking about right now.
Yeah, just kind of blows our mind.
Yeah.
All right, we got to run. We know you're going to be. We know the Apple call with analysts and investors is coming up in just about 4.5 minutes time, and we know Ed will be on it in our live blog. We'll be tracking all of it. Ed Ludlow, thank you. Of course, co-host of Bloomberg Tech on Bloomberg TV. Catch it at 11 a.m. to noon with Caroline Hyde, another co-host. It's always on Bloomberg TV Monday through Friday.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We want to talk a little bit more about Tesla.
Tom Narayan is lead equity analyst, global autos at RBC Capital Markets. Tom, good to have you on the program. He joins us from New York. I want to start with the sort of the headlines out of the Tesla call yesterday. As somebody who's followed the company for quite a while, were you at all surprised about the Model S and Model X, essentially, in the words of Craig Trudell, being put out to pasture?
Ouch.
No, not at all. I think that was pretty much expected, right? I mean, this company is moving more towards autonomy. It's more of an AI investment, right? Robotaxi, humanoids, right? The car business is in the past, really. We've known about this for a while. Now maybe it's the final nail in the coffin, so to speak.
So wait, you just said the car business is... Wait, repeat what you said about the car business, because I think people still, even though they don't value the company as a car company, but it's still thought of by many people as a car company. The car business is what at Tesla?
Yeah, in terms of valuation, right? It's a $1.4 trillion market cap, right? The most all of new car sales could ever be is something like $2.7 trillion. They sell 2% of all the cars in the world, right? So mathematically, it's not a car company, right? How do you get to $1.4 trillion of value?
Then what is it?
Clearly, it's an autonomy company, right? It's humanoids. It's robotaxi, right? It's not a private car that you and I buy and drive around.
Oh, that
you'll never get to $1.4 trillion of value.
That's because those business segments are already contributing so much to the top line.
She's being sarcastic, Tom. She's being sarcastic.
I'm looking at the FA page on the Bloomberg. Where they make money right now. Automotive, $86 billion in revenue expected in the 2026 year. And then energy generation and storage, that's almost, it's a little bit more than $17 billion. So that's where they make it. I get what everybody's saying, and I feel like Tesla's always been like, well, wait, not what we're doing, but what we're going to be doing. But how long do we have to wait to have it grow into that valuation that is much more like a tech company?
Yeah, you have a long way to get there, absolutely. But I think the way to look at this is not the bottom up, right? How many cars they're selling each quarter, et cetera. But you look top down. What is the market value of robotaxis? It is enormous, right? Mm-hmm. It's a much more economical and it's a much more efficient mode of transportation. And it's going to generate a lot more revenues. Look how much you spend on Ubers relative to what you are willing to spend on owning a private car. And then the humanoid space, which I don't know if that's the right word, humanoid. I think it's better to look at robotics.
Okay.
So many industries are being upended by this. The TAMs for both of these are in the multiple trillions of value. All Tesla needs to do is capture small percentages of this to get to its market capitalization that it has today. So I get it. This is far in the future. But I mean, you could say the same thing about a lot of companies, right? Netflix, when it was renting DVDs, right? It's not doing that anymore. It's doing something totally different. Amazon, 20 years ago.
Yeah, no, I think that's a really good.
People are looking at.
I think that's a good corollary. And at a certain point, Netflix stopped sending DVDs by mail. It wasn't that long ago. But before they did that, they made it very difficult to actually, sort of subscribe to that. They wanted to really push people to the digital video on demand, which is obviously the right direction. If you were to do that for Tesla, though, then why even bother selling cars to consumers right now? Why not just focus on creating these fleets of robotaxis and work on autonomy, work on robotics, and really go all in there?
Yeah, I think you can't really have one without the other, right? Remember, FSD, the software that powers the robotaxi, especially unsupervised, it comes from all the millions of miles and data collected from the cars that have FSD or have autopilot, et cetera. So it's a flywheel. You need to have the data to build upon that. And then once you have the robotaxis, there is a theory that could then go backwards and make people buy more cars. And the subscription for FSD on private cars could be another profit center. So while I do agree that in the year 2050, I don't know if selling boxes with wheels is going to be the meaningful driver of value for Tesla. I don't think it will. I think in the evolution of the company, you need this to build the next generations and to get to these autonomy innovations that they're trying to achieve.
All right, so when does Tesla grow into this valuation? When does the reality grow into, match up with the valuation? I'm looking at a PE. This is just one metric, 345, so 345 times current earnings, almost 200 times future earnings. So how long you said it's going to take a long time. How long?
So my valuation, right, I have FSD, I look at it at 2035. Robotaxi, I look at it at 2040, right? Humanoids, I look at it at 2050 basis, and then I discount those back, right? So you may have to wait a long time to actually see the earnings where it results in a multiple that's a market multiple, right? But you could say that about a lot of companies, right? I think the way to look at it is, what do you think about these end markets and these, robotaxis, the market, and humanoids as a market, and what penetration do you think these guys could achieve?
Yeah.
Is that captured in where the stock is now? That, I think, is the way to think about it.
Well, the stock right now down about 3.7%, at $415 a share. Tom Narayan, thanks so much. Appreciate it. Lead equity analyst, global autos over at RBC Capital Markets.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
A lot to get to with Lauren Goodwin. She's an economist. She's chief market strategist at New York Life Investments. She joins us here in the Bloomberg Interactive Brokers studio. We kind of went through a lot right there, but I want to get to sort of those individually. But before we do that, I just want you to answer for us the biggest risk out there for markets right now that you see and the economy.
Right now, it's if in a couple of weeks we have an inflation report that shows inflation is moving back up. I think that the reason that the market has been able to digest so many big developments and so many questions and uncertainties is because we have contained inflation. If that data looks a little different, then the Fed's dynamic looks different, people's economic forecasts look different. I think it really disrupts the consensus that the market has right now.
She didn't say geopolitics.
You didn't say geopolitics.
I thought you would say geopolitics.
I want to come back to that, but I want to go back to what you said about inflation, because Jay Powell, Fed chair, of course, sounded pretty confident about the mandate, right? The dual mandate of the Federal Reserve, and in terms of inflation and in terms of the labor market. I mean, pretty confident, don't you think?
I do, and for what it's worth, I agree with him.
Okay.
Our base case economic scenario calls for inflation to stay around where it is, maybe move a little closer to 3%, a little over. That's not a horrifically bad scenario, and that's probably a scenario where you get 1 or 2 cuts from the Fed this year and they stay put. And for markets and the economy, that's still a Goldilocks backdrop.
Hallelujah, because I have to say, going through what he said, especially initially, but even throughout, that's what came to mind, Lauren, is Goldilocks. like this is a pretty good spot to be in, right?
It is a good spot. And that's why I think that, I mean, look, geopolitics would be a way more interesting and fun key risk to talk about. But when it comes to what really disrupts the market, we've been talking on the desk constantly that 6 months ago it was impossible to have any sort of certainty or any sort of view. Now it's really difficult to get out of consensus. Most people are expecting a pretty good growth backdrop, a pretty good earnings backdrop, thanks to a Fed that's moderately easing, good fiscal policy support out of the U.S.
I keep hearing about the tax refunds that everybody's going to get and tax advantages for corporations.
A little bit of dollar weakening, a lot of portfolio sort of diversification and rebalancing. That's our view too, but it's difficult to break outside of that consensus. And I think the one thing that really disrupts the consensus for us, but for the Fed as well, is if that sort of sanguine idea that we will get a couple of rate cuts and certainly rates wouldn't be moving back the other direction just gets questioned. I think it also, we talk a lot about the short end of the curve with the Fed's policy rate on Fed Day especially. But inflation starts to call into question this conversation the Fed is having about independence and really impacts the long end of the curve. Now, so much of not only the affordability question in the U.S., but also risk assets are priced off of the long end. And so that it's a boring answer, but I think that inflation number is just a key to keeping the market as well behaved as it's been.
So why aren't geopolitics to you the number one risk? We have an armada, according to the president, heading to Iran. Yesterday, the president and the Iranians were trading barbs about that. I think has some people concerned that things could escalate, potentially what we saw in Venezuela, something similar. We've already bombed that country.
Two parts to this answer. The first is that there's no doubt in my mind that the change in the geopolitical backdrop is meaningfully impacting the way we need to think about portfolio construction. No doubt in my mind. This is not about a single administration. This is a 15-year post-financial crisis trend.
We've seen the flows, starting elsewhere.
And it's been exacerbated by a pandemic and Russia's invasion of Ukraine and all these things that just brought more attention to the fact that supply chains are vulnerable and that you might want technology, healthcare, energy, and a couple of other things at home. And that sort of the competition that's bringing, that matters. That's why we are seeing so many countries investing in and really trying to secure commodities and certain other supply chains.
So when you say those sectors, are you saying diversification here in the U.S. in terms of your exposure, or are you saying also diversification outside the U.S.?
I'm saying that countries and companies are realizing that we had just-in-time supply chains for those things, and unlike maybe many other goods and services, those are ones that you have to have secure access to it, not at home than somewhere else. And so that's impacting the way we think about a global portfolio in a major way. But when I think about individual risks, they certainly matter for the societies in which they happen, for human beings, for the way that we think about the world in general. But when I think about what disrupts the market, if you have U.S. companies printing reasonable profits, then what happens to oil prices when so much energy production has come online in the U.S. doesn't matter nearly the same way that it used to. And so again, I'm not saying that it doesn't matter, it wouldn't prompt volatility, but those tend to be shorter lived unless they disrupt that market consensus in the way I was describing.
But the only thing I would say is those supply chains, they don't move overnight. And we've talked to lots of CEOs that they are thinking about supply chains around the world, to where they sell. But some of this build, whether it's manufacturing here in the U.S., to reduce our exposure overseas, none of this happens overnight.
Oh, that's right. That's why I think it's become more of a part of the base case allocation question for investors and less of a risk. Now, one thing I think, though, that's really interesting about the business decision that you're bringing up is, and I was speaking about this last night, we had a global roundtable of our investment leads talking about some of these sticky issues. And one of the things that we were speaking to was you have a lot of investor consensus around a constructive economic backdrop, investment, et cetera. But it hinges on, the top very small percent of consumers deciding that they're still going to spend. It hinges on businesses continuing to make the decision that it is worth investing in these areas that are becoming more and more fragile. It's a little bit of a behavioral question, very difficult to answer in the aggregate. And so, though I think that that inflation number that inflation dynamic is one of the things that kept the markets the most stable, you could see how over the course of the year, worries could build up. Again, it's not our base case, but I think it's a very reasonable question to raise.
We are going to be speaking with Josh Green in just a minute. He wrote the Bloomberg Businessweek cover story on Gavin Newsom, who we just heard from with our own Brad Stone in a fireside chat. Governor Newsom said during that chat that markets and their negative reactions to some policies have been a check on the president. Do you agree with that? It's not, and I don't mean it to be a political question. It's just like we have seen
just the reality of it, right?
The reality, but we saw the president, in April said the bond market got yippy. We did see him soften his stance in Davos post a sell-off last week, soften his stance toward Greenland. People accused him then of tacoing on that.
I do believe that the market is an incredibly important constraint on not just this administration, but frankly, anymore on the economy. One, just to give an example, something that we've been researching really in depth is the concept that you've spoken about a lot of the K-shaped economy. You have sort of wealthier consumers spending, the lower income consumers really, really struggling in this environment. And people say, well, that doesn't really matter for the market. I beg to differ. Not only has it impacted sort of the political backdrop in a meaningful way, but what it's done, more importantly to your question, is it's brought what happens in the market closer to what happens in the real economy. If we see the 10-year run up and a 10, 15, 20% correction in the S&P 500, relative to wealth for these wealthy spenders 2 years ago, that's not a big deal. The market's been so constructive. But if they pull back spending from their pockets by 5, 10, 15% as a result, that's a major hit to this economy right now. That's a major change in people's expectations.
I love you went there because I feel like so many people point, well, the market, another record, this is great, this is all good. But we've also done some reporting about how much of the consumer spending is that wealthier group. One last question. Chris Waller, Fed governor, one of the dissents yesterday, the other one, Stephen Myron, which we expected to be a dissent. Having said that, is that his move in your view, that he really wants to be Fed chair?
I have no idea, but I do think that we're very lucky as a sort of investing populace that right now there is still actually real debate about whether the policy rate should be 1 or 2 25 basis points.
So that doesn't say to you that maybe that's a sign of the Fed not being independent?
Not yet.
Okay.
Not yet.
That's what I wanted to ask.
It's such an important question, but we're still in the range where debate is reasonable.
Yeah, debate's good. We love debate.
Lauren Goodwin, economist and chief market strategist at New York Life Investments, joining us here in the Bloomberg Interactive Brokers studio.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.